It's time for us to bring you a business news update with Stephen Carroll. Good morning, Stephen.
Hello, Catherine.
Let's start off with a story we've talked about quite a lot recently, that plummeting oil price and quite dramatic consequences for one enormous company.
That's right, and that company is BP. They've said they're going to spend $1 billion cutting thousands of jobs over the next year. That's in reaction to the falling price of oil, which has slumped by more than 40% since June. In its latest monthly report, the OPEC group of oil-producing nations said it would produce just less than 30 million barrels a day of oil in 2015. That's down around 300 barrels per day on current levels, but that's not going to affect oil prices greatly. In fact, after that announcement, we saw the price of Brent crude fall by 4% in trading on Wednesday. Here's where things are today. The price of Brent crude still below $65 a barrel, which is putting it near 5-year lows. Not a great time for the oil markets, even if they are up slightly in trading today.
And are those fluctuations on the oil price impacting on stock markets?
As we've been seeing the trend you were talking about over recent days, we have seen shares being hit by this change in oil prices. The London markets today, as you can see, opening slightly down on that news. Here in France, investors looking at news that inflation hit a 5-year low in November at 0.3%. Airbus shares are down almost 4% again today. This after the company issued a profit warning on Wednesday. Their shares fell 10% yesterday, down another 3% today. Looks like it's not going to be a very easy day for them on the markets. Over in Asia, a negative lead from Wall Street, again linked to those oil prices not helping things on the Asian markets. The Nikkei closing down 0.9%. The Shanghai Composite, of course, interesting to watch with all the swings we've seen on that market this week. Big fall on Tuesday, somewhat of a recovery on Wednesday. It's down again in trading today, about 0.5%.
All right, you just mentioned some French economic data there. The Economy Minister here in France has actually been defending a package of reforms that he's bringing in to try and boost the economy.
That's right. Emmanuel Macron gave details of these reforms to the Cabinet yesterday. They include easing the monopoly on intercity public transport here in France and reforming parts of the legal profession. But the ministers face the most criticism over changes to Sunday trading rules. Members of the ruling Socialist Party have come out staunchly against allowing shops to open on 12 Sundays a year instead of 5. Emmanuel Macron, though, says that the current rules are driving people to spend their money elsewhere.
We're told people don't buy things on Sunday, try something else. Almost a quarter of Amazon's sales are made on Sunday. But soon the battle won't be, do we open in city centres or in the large suburban supermarkets? It will be rather, do I go shop on websites that pay very little tax in this country and continue to destroy jobs in France, or do I allow French men and women who want to work?
Right, so from troubles with the French economy to one economy that's doing a little bit better, we can say, Detroit, the motor city, motoring out of its bankruptcy programme.
Yeah, that's right. The US city officially exited bankruptcy at midnight local time, bringing to an end the biggest public default in US history. It shed $7 billion of debt as part of a restructuring programme. But Detroit's mayor has warned that many social issues remain, including abandoned houses and a high crime rate. Catherine Viette has more.
It's been called the grand bargain by those involved. 18 months after declaring bankruptcy, Detroit has emerged on the other side, shedding some $7 billion of its $18 billion debt. A shrinking tax base, along with growing health and pension costs, fed a cycle of borrowing to meet expenses until Detroit was unable to meet its obligations. It's the largest municipal bankruptcy in American history, and the restructuring plan required many cuts and compromises. Among them, officials cut retiree health costs by 90%, from $4.3 billion to $450 million. Retirees agreed to pension cuts, reducing the obligation from $3.1 billion to $1.4 billion. And general obligation bonds got a 28% haircut, going from $552 million to $397 million. The city was able to save its famed art collection, but the hockey stadium and prime waterfront property were turned over to investors. The city's emergency manager says he's confident Detroit is now on the road to recovery.
We are thankful that at this point the city will emerge later today, by the time I go to bed, from bankruptcy. We will exit. And we look forward truly to a better time for the city going forward.
Going forward, the city must stay within budget for 3 years in a row before it can come out of strict state oversight.
All right, finally now, news of a South African bank that's been forced to apologise. Stephen, they published a research note with a very controversial title, I Can't Breathe.
Yeah, that's right. This was the expression, of course, used by Eric Garner, the unarmed black man who was killed after being held in a chokehold by police in New York. And the bank Investec used those words as a title to a piece of research which was referring to a regulatory scrutiny being applied to the British Bank Standard Chartered. Now, unsurprisingly, the use of that expression in that note caused a lot of criticism of Investec. Among the critics, the high-powered New York banking regulator, Benjamin Lawsky. This is what he had to say. He said that it was terrible and should be disavowed, with apologies by Investec. Now, the bank did apologise after the outcry over this note. They said that the content was inappropriate and apologised for any offence that it caused.
OK, thanks very much for that business news update. Stephen Carroll, our business editor here at France 24.